Yo, what's good, guys? Welcome to Daily Bias Part 3, where we'll go over charts again. This is kind of just going to be like a recap sort of thing. Recapping like how we find our daily bias, I guess. And we're just going to do a little bit more of what we did yesterday. Okay, so again, what are we trying to figure out? First thing, or so like the reason why I mentioned like the weekly time frame is if we break structure to the downside on the daily, but we're in an uptrend on the weekly, odds are it's going to be a weekly retrace. And that's just something you have to keep in mind, right? And that's something you should keep in mind for every single time frame is whatever the higher time frames hold higher power and are going to cause the market to move in that direction, right? So if we're looking at the weekly and we see break of structure to the downside on the daily like this, right? Odds are it's going to be a weekly retrace. So what can we do, right? For something like this, we can use our retracement tools. Okay, so ideally, I would have liked the weekly time frame to come into the to equilibrium at least, right? Or fill this fair value gap. And that's kind of what I was banking on this past week because it was underneath this monthly low. Price did not decide to close underneath the monthly low as I thought it would. Okay, and that's fine, right? I'm completely fine with that. It broke structure to the upside on the monthly. Again, though, economic climate looks awful. So what does that lead me to believe? Well, there's liquidity again on the monthly time frame all the way up here. So where is price likely going to draw towards? Here or here, right? And then cause a reaction off of it. I personally don't think we're done. Personally, that's just how I feel. And yeah, that I don't know. That's just how I feel. That's just how I feel on it because, dude, the news data is telling us, we still got shit to work out, bro. Like there are too many people that are still rich and that still have all their money from this COVID shit. And my ideal target, and sorry, this is getting way off track, but this is good information anyways. My ideal target would have been to take out these COVID lows. These lows that were made through COVID where most people were probably buying. After we were able to take back, after we were able to reclaim all-time highs after this big dump, this was smart money. This was the rich getting richer. Liquidity sweep launch. Okay? All dumb money entered off of all-time highs getting taken out. This is where people got rich, right? From like here up to here, right? That's where people got loaded off of just COVID stocks booming. And then we break structure. To me, this move down hasn't really done anything. Ideally, right? This is a quarterly order block. Why? Because we swept liquidity, moved higher. We didn't come near it. What did we fill with this? We didn't fill like really anything. Maybe we hit equilibrium. But other than that, barely hit equilibrium. I think this thing wants to go lower. Like this is not enough. Like ideally on a high time frame, one tiny wick during 1 week, that's not enough time for smart money to fill their orders. Right? It would make sense for it to take out these COVID lows, fill this order block. And then we liquidate all the people that got rich during COVID. And that's essentially why we have to fix this inflation shit. Because we were handing out money like nobody's fucking business during COVID. We were literally handing out money to like handing out like 2.8K, bro, to people who didn't deserve it and to people who didn't need it. And what were they doing? They were buying stocks. They were investing. You guys remember back in COVID when freaking investor TikTok was going crazy? These are the best stocks to buy with your stimulus check. Dog, are we being for real right now? So, anyways, like, cool. We broke structure of the monthly. This is the next draws on liquidity. I still think we're going lower. At least to take out like these two lows. Okay, but anyways, we're getting too caught up here now. Okay, so back to daily bias. I like to look at the weekly to understand, okay, if we get a daily break of structure to the downside and we're in a weekly uptrend, we should understand that, okay, we need to use our retracement tools to figure out where price wants to draw to. Okay, and keep that in mind while we're trading on the daily. Okay, then we get over to the daily and we figure out, okay, what is our daily bias? What is daily market structure? Oh, we got a break of structure to the upside. Cool, we're looking for buys. And then from there, scale down into the 4 hour. Okay, what is the 4 hour time frame saying? Buys, perfect, even better for long positions. What's the 1 hour saying? Buys, perfect, even better for long positions. And then what do we do when we scale down to the 15 minute? What do we do on the hourly and the 4 hour? We use our building blocks to find those high confluence areas to take a trade. So like here, there's not much, right? There's really not much on this chart. And that's why I didn't trade the S&P on Friday. But like to me, I see liquidity lying underneath these hourly lows, massive imbalance within here, another imbalance underneath here. You could consider this candle to the downside an order block. Why? Because it swept these lows, caused a rally higher, orders were filled. Okay, so these are the things that you want to mark up. And then when price comes into these high confluence areas, then what are we doing on the 15 minute, on the 5 minute? We're mapping out more high confluence areas on the 15 minute. Okay, so right, maybe we come into this imbalance. What's a confluence, right? This is confluence on the hourly, right? So we have high time frame confluence along with, what are we trying to find now? Low time frame confluence. We have liquidity underneath here. Maybe we see a liquidity sweep, then a break of structure on the 5 minute. Perfect, long that shit, right? Because the daily, the weekly, the 4 hour, the 1 hour, and the 15 minute is giving us confirmation, right? Daily saying bullish, weekly saying bullish, 4 hours saying bullish, 1 hour saying bullish, 15 minute is telling us execute. That's what we need to do. Yeah, you're probably saying, oh, there was a break of structure on the 15 minute right here to the downside. Dog, it's a 1 hour retrace. Remember, keep that in mind. 15 minute break of structure, 1 hour retrace, 1 hour break of structure, 4 hour retrace, 4 hour break of structure, daily retrace, daily break of structure, weekly retrace. Higher time frame holds higher power. So that's why we want to keep our bias on the high time frame, and we can't get skewed by these low time frame bullshit ass moves. Okay, so when you see a 15-minute break of structure, don't be like, oh, are we going bearish? No. Stop getting trapped into the low time frame bias, because it's really easy to do that. A lot of you guys see a break of structure on the 1 minute and instantly think the whole chart's going to go down forever. A 1 minute break of structure could very well just be a 5 minute retrace, bro. So, with that being said, we used high time frame confluence with low time frame execution to get long-term trades that run pretty far. Okay, and that's our goal, right? Because yes, you might see a break of structure on the 5 minute, and yes, you might get a couple points or a couple pips, but guess what? If it's in the opposite direction, you're getting this small leg versus what you could be getting is the big leg to the upside. Small leg down, big leg to the upside. Which one would you rather take? Would you rather take the retracement or the extension? Me personally, I'm taking the extension every single day. That's your goal every single day, is to be taking the extension. Okay, so when price is not in line with your daily bias, you're screwed. Okay, so boom, right? High time frame, figure out your confluences. 4 hour, there's really not much to go off of. Hour, there's a little bit. We have liquidity underneath the hourly low, imbalance, liquidity underneath this low, imbalance, order block, right? And, you know, if it comes in here and then gives us no reaction, cool, we're not executing. That's the great part about this, right? When I'm in my Zoom call, I map out all these areas and I'm saying, you know, like, if it comes here and gives us a reaction, cool, we'll execute. Hold on. But if it comes into these areas and doesn't give us a reaction, what do? Like it was never there, because it didn't give us a reaction and it didn't give us the move that we wanted, so we don't care about it anymore. Okay? So that's what you're trying to do. So that's how we do it on the S&P. We'll show an example on GU now. That wasn't all right, dude. I swear, like, okay, all right. I need to clean these damn charts after the Discord Zoom calls. All right, bro. And I need to blow my nose again. Whatever. Anyways, this is a perfect example of the daily and weekly thing. Okay, so we're in a downtrend on the daily, but weekly, we're not quite into the imbalance yet. So what are we trying to do? Right? Bearish trend on the daily. So what are we trying to do? We can find confluence on the daily for where price would like to draw towards. Okay, and we can use that as price points, as take profits for our very small time frame trades. Because the weekly isn't even into a discount yet. That's like the bare minimum that I look for retracements. Is it even in a discount? Because to me, that's everything that you would want to see. So for this, right, weekly's in an uptrend, daily's in a downtrend. Perfect. We're not taking, ideally, we're taking shorts because the daily's in a downtrend, right? But we understand that this downtrend probably won't come all the way down here. Why? Because the weekly's in an uptrend. So where are we looking for price to draw to? First place would literally just be coming into a discount. Second place, scale down. This leg here, order block. Why? Boom, big leg down, taking out liquidity. Boom, rallies higher off of it. Orders were filled with this move down. What else do we have? Like this within here, imbalance, also in a discount, right? All of these things I'm just marking out on the chart and I'm saying, yeah, if it comes in here, cool, perfect, I'm taking it. Right, what else do we have? We literally just have like liquidity underneath these lows. If we go into the hourly, we have liquidity, hourly liquidity here, hourly liquidity here. Go into the daily, okay. Where's the order block that caused this entire move up? The move down that caused this entire move up right here. Cool, maybe price wants to, boom, come up here, right? These were the shorts that we took today. Or sorry, yesterday. We took the shorts off of this. Right, and this is probably something we could have held over the weekend, but I just don't like doing that. Because guess what? What are the odds that this thing ends up turning around? Yes, and this is another thing. Yes, the 4-hour broke structure to the upside, but look at the daily. Look where the daily's at. All the way up in a discount. What happened to the hourly? We broke structure to the downside. That's kind of all I need. So you're probably saying, oh, the 4-hour broke structure to the upside. Well, let's use our heads. Sure, yeah, the 4-hour broke structure to the upside. Maybe I don't want to take a short underneath in a premium, but once it gets up into a discount, once it gets up into, oh, what's this? A 4-hour order block, sweep of liquidity, extension down. And I'm seeing reactions on the 15-minute and on the 5-minute. Along with price coming into, this was the confluence that we took out off yesterday, along with price coming into an hourly order block here, makes sense to go short. We're in a discount, we're in a 4-hour order block, we tapped into an hourly order block, and we saw a reaction on the 15 and the 5-minute. And then what does that give us? A daily trade where we can then target daily take profits, first take profit off a 5-minute execution. Boom, discount. Literally could be this low, liquidity. The next draw on liquidity in a downtrend. The next draw on liquidity in a downtrend is just the most recent low. Then we have the discount level, then we have liquidity here, and then we have the order block here. Keep it freaking simple. That's all we need to do. Okay, that's all we need to do. And then we're still keeping in mind that, hey, the weekly, we're in an uptrend. Okay, but we're not going to have bearish bias until we break structure back to the upside on the daily, because what's that telling us? That the weekly retracement is over. Daily downtrend, weekly uptrend, right? The daily is breaking structure to the downside. It's a weekly retracement. Once it breaks structure back to the upside, cool. That means the next extension, the next leg up for the weekly is ready to go. Does that make sense? Moving forward. This one's a funny one, actually. I like this one. I need to find that minion picture and just save it. That's actually a very funny picture. Okay, anyways. Gold. What are we looking at? Weekly, downtrend. Okay, where would be confluences for us? Okay, where would price likely want to draw to in a downtrend on the weekly? This is something where it's like downtrend on the weekly, uptrend on the monthly. Keep that in mind. Who really cares, because that's such high time frame? Okay, weekly we're in a downtrend. We're currently within this imbalance, but does that really matter with our daily bias? Not really, right? Weekly's in a downtrend, daily's in a downtrend. Cool. What are we looking for? Retracement tools. Cool, we're in a discount. Scale down. Oh, look at that. We just filled an imbalance. Scale down to the 1 hour. What's this right here? Hourly order block. Boom, we pushed higher, took out these highs, capitulation lower. Pretty much filled past this already. We're within the hourly order block now. So what would we be waiting for, right? Since we're in a daily discount. Sure, the 4 hour broke structure to the upside. But remember, just because the 4 hour broke structure to the upside, what does that mean? Daily retracement. So yeah, we've already retraced on the daily. We're in a discount, so we're looking for reversal points. For price to come down, take out this low. For price to push lower. Where are our draws on liquidity? Where is price likely going to pull towards on the daily now? Daily liquidity. Daily order block. Like literally this whole thing is an imbalance. I'm not going to mark that on the chart because we can just eyeball it. Okay, you can even mark the top of this because this could potentially be an order block as well. Why? Boom, move down, big extension up. Yes, this is like technically the move down before the break of structure to the upside, but this, you can see, boom, leg down, big extension up after that. Right, so those are our draws. And what are we waiting for? We're waiting for confirmation on the hourly, on the 15-minute for execution points. Do we have a break of structure to the downside on the 15-minute yet? No, we don't. So are we going to execute? Also, 15-minute imbalance, right? These are the things that we want to look for, okay? Daily, downtrend, weekly, downtrend, 4 hour, uptrend, but we're using 4 hour building blocks to find an execution point within the 4 hour building block. Okay, so what do we have within here? 15-minute fair value gap, 15-minute imbalance. Also, hourly order block. Okay, so this whole price range, right? Why do we use our building blocks? Because it's price range that are high confluence for orders to get filled, for price to go in whatever direction we think it's going to go. That's all this is. It's just high probability price ranges, and we're executing off of confirmation. Okay, so what are we waiting to happen? A break of structure to the downside on the 15-minute. Okay. Maybe we want to see price come all the way up into this 15-minute order block. 15-minute order block within the hourly order block. Cool, we're not far from it. We haven't broke structure yet. Might as well mark it out. This whole thing's an imbalance. We're within an hourly order block right now. So we're literally just waiting for confirmation. Confirmation to the downside on lower time frames to go short. And then where can we target? Those daily areas. Boom, daily draw on liquidity here. Daily draw on liquidity here. Potential order block. Potential order block. That's take profit 1, 2, 3, 4. And the crazy part is you don't even have to target that shit, but you can just have it in the back of your head. Sure, maybe if you want to hold your trade for like 3 or 4 days, I don't like doing that. Because the great part about this is when we get a break of structure off this, this is likely what it's going to look like. Here, first take profit, draw on liquidity. Second take profit, draw on liquidity. That's already a 1 to fucking 4. Our first take profit on the daily time frame would have been a 1 to 4.79 risk to reward. Right? If we were to target all the way down here with our multiple take profits, that would be a 1 to 13.5 risk to reward, bro. That's crazy. That's like passing like a funded account and a half off a trade if you hold it all the way down there. Would I do that? Hell no, because I take partials. Okay, because I like to take profits. All right, but hopefully this video helped you guys figure out your daily bias. And like I said, you know, tomorrow's video, we're going to go into, I'm kind of spamming the trading videos right now because hopefully you guys have the discipline down. Hopefully you guys have the risk management down. That shit should be damn near robotic now. We did the trading plan video like, what, a week and a half ago? If you don't have that down by now, you're emotional and you need to fix something. You need to get off live. You need to go to demo. Maybe you just need to take a break from trading and make some money so you feel like confident in yourself to even have the potential to risk money in the future, right? Maybe you're still trading demo and you're still getting emotional about it because you're like, I can't wait to go to live. That is not the right headspace to have. Okay? So, that being said, daily bias is wrapped up. We're going to get into taking profits and we're going to get into stop losses in the next couple of videos. And then from there, I'll probably do another check-in, figure out where you guys are at, figure out what you guys want to see more from me, and then we'll go from there. Hopefully you guys appreciate this video, per usual. I appreciate y'all. And I will see you boys tomorrow, all right? Peace out.